Yeah, I'm losing my
Some of
edge.
views on the dollar today here at the small exchange. Small US dollar. Hopefully a lot of people are looking at, hopefully a lot of people are trading because it has been all over the place, mostly to the downside. A lot of bearishness in this dollar in recent weeks. And I wanted to dive into it a little bit here on Friday afternoon and not do any crazy number crunching, but just look at what this sell-off here in dollars has meant relative to the 7 constituents that this index is pitted against. And really, for the first time this year, failing to bounce at all. Today, US dollar product up 50 cents. Wouldn't really call that a significant bounce. But you see this, and we looked at this last week, Pete, where you've got, a $3 or $4 sell-off here in the US dollar product, and then a big bounce in mid-March. And then another $3 or $4 sell-off here, bounce. Every sell-off met by some back and forth, which is normal in currencies. You see some commodity markets, Pete, that can trend lower for days and weeks. So you're looking at silver right now that's just on a tear for the last few weeks, but usually more back and forth in this currency. And we're not seeing it right now here in US dollar. Do you have any faith in a bounce here?
Well, you know what? We did. I think my longs are at 151. Let me take a peek here. 151.34. So definitely, let's erase where we are, but we actually put some short Aussie against that, and that worked out. Today's bounce obviously helping that position out with a little bit of rollover in the Aussie, but that's what we wanted, was a little bit of extension, playing a different set of extremes. You know what? This is unlike, and I like this, is that you're right. The move from 160 down to 158 gave you a little bit of back and forth. The move down from 154 to 156, same thing. At some point we'll get a little bit of that too. I don't see this being accrued where we go from 35 to 65 or reverse a silver from 17 to 26. So I think this is that kind of trade that you want. Its own unique occurrence, which today shows very starkly relative to everything else. And this is a tradable range. Granted, it doesn't seem like a range yet because we are sitting right at the bottom of that rather precipitous move, but that's what you like to see.
Sure. Yeah, it is definitely, for me, drawing up a lot of ideas for longs. And I guess the easiest idea here is just like we did, buying this SFX. I think it's due for a little bit of a bounce. Hasn't been below 150 for the last year of trading. It has going back the last couple years, but I mean, bearish or bullish the dollar, this is a market here in the FX space that normally sees some back and forth. Even if it does trend in one direction or the other, we'll see some short-term back and forth, and I think it's due for a little bit of that. But to put a little more context behind just the simple buying of / SFX, Euro is the outperformer here for 2020. We're going to look at a very different story if you're just looking the last few months. But this has been really nice, and you have been a large proponent of the long Euro trade here, Pete, in recent weeks, and you've seen this Euro claw back from being not the strongest performer. It started off the year as one of the weaker performers here, as you can see, underperforming these other 3 currencies. But not doing as poorly as the Australian dollar. Has staged a big comeback and is now up over 5% on the year relative to yen and Aussie. That's up a few percentage points on the year. And then that pound in Canada just can't get back to unchanged given the selling here in mid-March. But Pete, a little bit different story here if you're looking at just the last few months.
Right.
If you a lot of people like to look at, year-to-date stuff, and at the end of the day, it's just like the calendar is just a way of summarizing data. You don't have to be bound by, January 1, 2020, and now I'm looking at these trends. I would almost think it's more interesting to look at since the pandemic hit the stock market in mid-March, and we're maybe in a little bit of a new world here in financial markets. What's happened since then? And what's happened since then is huge rally in Australian dollar, up 25%. And we're seeing it start to plateau a little bit here, Pete. As you can see, these other markets, pound, euro, and Canadian dollar, performing well, but not nearly to the extent. And yen barely, and actually today bringing yen back to unchanged on the year. Yen not building any ground on the US dollar. But what's your view? I think you have a little short bias in this Australian dollar now, right?
I do, because you know what, you look at this and we're a little bit lower today. It's had a great run. But you know what, this Aussie tends to, when we get some unlocking of movement and volatility in the currencies, Aussies tends to underperform when the dollar's strong and outperform when we see some weakness. It's given us exactly what we'd want. Look at that. In terms of currencies, you think about a 12% short-term divergence against its next equal participant, and you almost look at 22% against the yen. I think the yen, this is a great encapsulation, because we're going through a lot of different types of movement here in the underlyings. Yen, as interesting as it seemed yesterday in terms of that up move, we didn't have any great interest in trading either side of it. I think the yen is still a tough trade. If you're looking for extreme versus extreme, maybe that's a more interesting trade. But I think this Aussie has done what you wanted it to. It's given you a nice ride up. Are you going to try to catch it up to 30%? Or maybe you use this as a tool to manage some other trades to basically, this is a great visual because it shows you 5 different pieces. And I mean, these are extreme divergences. You could have argued that when the Aussie was at 15% and the others were at 5%. So just trading that maybe isn't enough. Let's figure out a different way to put some strategies together.
And I want to look at this similar to how people look at stock indices. And we did this as recent as maybe we even did this yesterday or the day before, where we're looking at technology stocks outperforming energy stocks for the last several years. And looking at, okay, if I wanted to buy the stock market, the best value to sell something against it would be technology, because it's climbed like over 100% in the last year or so. And this is the same thing, though. You've got a US dollar that is getting beaten up against all of these other currencies. Right. You kind of think of it as the same, like stock index, all of these players that are within it. And I can have an opinion on the big thing and also take these little pieces out or hedge that position with these other little pieces. And it's similar with this Australian dollar here, where it's like I've got this exposure with a small US dollar product, and I can make that initial decision on whether I want to be long or short. I mean, there are plenty of people who still think there's more ground to cover to the downside in the US dollar in the long term. We're looking at more short-term take on a long dollar trade here. And it's got exposure to all of these currencies here, euro, Chinese renminbi, which you can't really trade. It's nice that we've got some exposure in here in it, but it'd be very difficult to find a way to trade that currently. Yen, British pound, Canadian dollar, Australian dollar, and also some Mexican peso in there. And so you have all these tools within the index to play with, similar to the tech sector, the energy sector, the industrials, consumer staple, all those different things that make up a stock market. And you can start to build something interesting here. You see that this dollar trade, if you wanted to be short, I would almost like being short SFX with that short M6A here against it on a one-to-one trade. You see that this dollar is with this type of trade a lot more expensive when you take the Australian dollar piece out of it, relative to going back to this trade where US dollar is really on its butt. But when you take out the 25% rally here in Australian dollar, very different looking chart for the US dollar here. And I know this is a lot of moving pieces, but essentially what you're doing is, if I wanted to sell the US dollar, then I sell US dollar and I'm long all of these things against it, right? This Australian dollar has rallied huge in the last few months. So what I can do is sell the US dollar and sell out my exposure of that Australian dollar that I would be long.
Right. And Frank, you're spot on. Let's take out looking to sell that dollar off of that first page. It's like, wow, I'm selling this huge fall. Well, we don't know where markets are going to go. And you're right. I'm still dollar bearish here, but I think there'll be some back and forth. But why, if I have the opportunity to use a simple expression of the dollar, let's take out that part that makes me feel that if I want to be dollar bearish, I'm not selling it at like that low print. I'm actually creating a different trade that actually has much different location and goals to it. I think this is I know we're going to walk through this a little bit. There's lots of different ways you can trade both sides of this market,
Yeah,
which is a theme we always resonated about. I want ways to build trades around both sides. Now, some
sure.
of those ideas may be short term, some of them may be a little bit more structural, but putting this together this way really adds the ability to do that.
And it's the same thing like with that stock index analogy that I was using. Okay, the stock market, all the various stock markets, small stock 75 included, that you could invest in and buy, they're in top, 2 percentile
Right.
of all time highs. Okay. And so, but you still want that long exposure. You want some long stock market exposure in there. It'd be akin to buying that index and then selling that really strong technology piece, because if stuff turns, you would expect that one to give back a lot of ground. Same here. I want my short US dollar exposure, but I don't want to be long this Australian
Right.
dollar that has gone on a hell of a run recently, all the way back to 72 cents. I mean, Pete, it went from in the 50 handle there to 72 cents. That's a huge move for a currency. And so it would be a matter of selling that US dollar and then selling out that Australian dollar against it. When you look at the long side here, I know you're more interested in a long dollar, long euro trade of late, but pure extreme play here is this yen that has
Yeah.
not really been able, like we're seeing today, has not been able to make up any ground on the US dollar. So if I wanted to be long US dollar, I wouldn't want to be short this underperforming yen against it. So I can buy
Absolutely.
SFX and buy / MJY.
There's both sides of that long dollar, short dollar trade. I think the yen in and of itself, now I'm long some yen. I'm looking for a 25-point bounce,
Sure.
off of just kind of random noise at the end of the week. I have no opinion as to, if the yen's going to regain its highs or not. We see it just strapped around that unchanged level. This becomes a very interesting piece to trade the other side of that short term. Well, I think the dollar has had a nice shakeout to the downside. Let me add some long dollars and let me take out the most disjointed piece of it to get that exposure. And this plays very easily. How can I construct both sides of that trade? Here are two ways to do that without having to clutter through the individual currency pairs. You're using, and you always want an anchor. The Smalls dollar index gives you that anchor. You can use that for a simple expression, long or short the dollar. If you want to look at that more nuanced piece, use the anchor and then choose how easily can I break out the pieces. Everything you've built here resonates great for trade ideas, and also it's simple to execute. We don't have notionals and IV and all this complexity wrapped around building this out. Here it is. You're going to build one, and if you want, you can add the other. Give yourself a slightly
Yeah.
different trade. This is
And
great.
it's not only the creativity piece that I think attracts a lot of people to, okay, I bought my dollar. I can add something. Wow, that's creative. It's a new trade. It's maybe giving me a better value here than the dollar alone. But also, Pete, you'll notice that we're doing this, and this y-axis here that's showing you the notional changes in these trades is very small.
Right.
When you add these currency pieces, it's not only a nice creative piece, but you're taking the small dollar trade that has moved, I think, a little over $1,000 on the year, and you're reducing it to something that's moved, $600 or $800. Like it's almost 70 or 80% of that big contract alone. So adding this piece will create a new idea and a
Right.
nice new trade, but also reduce some volatility in your portfolio.
Very good. And all these trades, which package together nicely in terms of capital efficiency. And you mentioned that portfolio size. Here you're fitting in a trade that, from a capital standpoint, gives you a very efficient, diversified piece. I always am a strong advocate of you should have some sort of dollar exposure or idea within your equity-centric portfolio. Easy way to do it here, and not an overwhelming position against everything else you're doing.